be presented by Mr. Shalabh Sharma from Hdfc Bank in India. He's the Deputy General Manager, and his presentation will be looking at really providing an introduction to Hdfc, which I'm sure you're familiar with, is really a leader in housing finance lending globally, and has so much very useful experience to share from their operations in India. The presentation is Footprints in Africa and Insights on Affordable Housing in India. So I believe that, Shalabh, you're with me. If you can turn on your camera so we can see you. Good morning, good afternoon, actually. And I think for you, even later in the afternoon.
Hi, good afternoon. And I hope you can hear me and see me. I'm just trying to upload my presentation.
Excellent. I can definitely hear you. And you've got a lovely audience here. At the moment, our room has about 90 people. And they've just spent the last 2 hours participating in a prop tech masterclass. And so I think that there are certainly a lot of examples that are starting to also come out of India as well. So perhaps that's something that you might also want to touch on. This session will go through until 12:30. And then at 12:30, we'll start with an hour panel discussion on the data agenda for Africa. So Shalabh, I'll hand over to you now. And if there are questions, colleagues, please put your questions into the chat. And then if there's time, we'll see if Shalabh can respond to some of them. Thank you so much.
Thank you, Kezia. Thank you, Kezia.
Are you managing to share your screen?
Yeah. If someone can confirm if the screen is visible.
It's not.
It's not. One second.
It's not.
Sorry, just allow me a minute.
Okay. There we are. We can see it. And if you can put it on full screen or presentation mode, I think that would be best. Perfect.
Sure.
Okay.
Sure. Thank you, Kezia, for the introduction. Good afternoon, friends. I am Shalabh Sharma from India. And today I shall share with you the journey of Hdfc over the last 40 years. During the course of my presentation, I shall also highlight initiatives by Government of India in promoting affordable housing. And towards the end, I shall cover Hdfc's footprints in Africa and how we would like to strengthen our partnership with startups, banks and financial institutions, government body and associations in housing and real estate finance. So let's start with understanding more about Hdfc. Hdfc was promoted in October 1977 as the first specialized mortgage company in India. Hdfc is currently one of the largest originators of housing loans in the country. The primary objective of Hdfc is to increase the flow of resources to the housing sector through the integration of the housing finance sector with the overall domestic capital markets. Besides lending for housing finance, Hdfc's activities include deposit mobilization, provision of property-related services, property identification, legal and technical assistance, sales services, property valuations, and training and consultancy services, both in the domestic and international markets. Over the years, Hdfc Group has emerged as a strong financial conglomerate in the Indian capital markets, with a presence in, as you can see in the slide, in banking, life insurance, asset management, general insurance, venture capital, and education finance. As we speak, our market cap is already over 40 billion US dollars. However, it's interesting to see how we have reached this far. So the idea of coming up as a specialized housing finance company came from the fact that an average salaried borrower till late 1970s had to accumulate savings almost till his retirement for either buying or constructing a house for his family. There was no institution which could give long-term funding. Banks were reluctant and skeptical to give loans to individuals and were not sure if people will pay back over such a long period. And this is what prompted HDFC's foundation by a group of professional bankers and business people. Well, HDFC being the first housing finance company in India, we only learned by doing. It is probably amongst the few institutions in the world that promoted competition in its own sector. In fact, we promoted 3 other housing finance companies, though it is inappropriate to give names over here. And we also promoted India's first rural housing finance company. There are other firsts as well associated with HDFC, like we helped in setting up the regulator for housing finance company in India. HDFC was also the promoter of the first credit rating agency in India. In fact, HDFC was also the first to come up with a credit bureau in India, which is CIBIL. HDFC even participated in the first securitization deal in India. So overall, HDFC recognized the need to develop the housing ecosystem in India. In the last 4 decades, HDFC, from being owned by domestic investors, is now owned 70% by foreign investors. We have moved from being in a monopoly position to a healthy competition with many housing finance companies and banks, and this has overall helped in promoting ease of finance across all segments in India. Over the years, the model of sourcing has also changed from customers walking into our offices to now being served at the doorstep. In fact, 97% of our loans are now sourced through distribution partners. And I shall cover more in detail in my subsequent slides. Fixed rates are a history, and now we have developed floating rate loans, which are dynamic and in sync with the economic fluctuations. Hence, we have moved from a regulated interest rate regime to a market-determined regime. To give you a perspective, last year HDFC approved 5 lakh applications. As I mentioned in my previous slide, 97% of our business is sourced by distribution channel partners, with only 3% coming as walk-in business. What is unique to observe is that 82% of overall business is sourced by channel partners of HDFC, which includes our own distribution and group company. HDFC Sales is our 100% owned distribution arm. And as you can see, it sources over half of HDFC's business. And HDFC Bank, which is our group company, sources another 23%. Generally, you will see the competition, doing the converse of this model, where largely the loans are sourced by the external distribution partners. However, in HDFC's case, where it is largely sourced by internal distribution channel partners, it has helped us in 3 ways: by keeping the sourcing costs low, by retaining good talent for sourcing well within HDFC and not losing to the competition, and restricting the takeover of such loans by the competition as well. In fact, now this model is so popular that most of the banks, without naming them, are replicating the same model in India. This slide gives a good breakup of our individual loans. As you can observe, HDFC has focused primarily on salaried borrowers, where the discipline of repayment is much higher. And this has helped in keeping our NPAs low, and in fact, I should say the best in the industry. It's also interesting to note that 55% of our funding goes towards first buyers, which is thereby helping in organic growth of housing. This would mean around 3 lakh borrowers every year. This is also supported by government's initiatives, and I shall talk more on this front in my subsequent slides. Geographically, we are well spread across India, with southern and western India contributing the most. The corporation was founded on the core values of trust, integrity, and transparency. These values are ingrained in the corporation's culture, and corporate governance practices revolve around these values. We at HDFC have ensured that we do our bit in following the global standards when it comes to governance. Nurturing long-term relationship with our stakeholders has always remained the mantra. Constant engagement with investors has remained one of the key focus areas for the corporation. As you can see, we have been ranked amongst the top 5 companies in corporate governance, and we have continued our efforts both towards environment and social causes as a responsible corporate. Our mantra has been to constantly exercise our discretion and use our judgment to ensure that we abide by the spirit of the law. Now I shall share with you some broad views on mortgage market in India with some highlights on affordable housing. This is an interesting slide which reflects how government's intervention in supporting housing has helped in improving affordability over the last 25 years. While the property prices and annual income have only moved up, but with tax incentives and subsidies by the government, the affordability has improved greatly. To give you a perspective, the average property cost was around 22 times the average annual income in 1995, which with reduced rates and government's support has come down to just 3.5 times now in 2020. I shall cover a slide on how rates have reduced with government support as well. Mortgage market in India is far from saturation. And as we can see, the penetration is still low when compared to similar markets in developed economies. So the thrust on promoting housing at India has continued, both from the government as well as private players. And as we discussed, HDFC has been instrumental in making all efforts towards developing an housing ecosystem in India. Government of India has taken good measures in promoting housing as a sector. As you can see, the initiatives include tax incentives on loans availed by borrowers. Now, this is not only on the interest paid, but also on the principal paid, and they both qualify for tax rebates from the borrower's annual income. Further subsidies being provided for lower and middle income and economically weaker section. It doesn't stop here, as the government has even provided incentives to the developers who are constructing projects in affordable category, as well as to NBFCs, non-banking finance companies and housing finance companies, for granting loans at subsidized rates against such funding. This holistic approach taken by the government has created a new demand in the affordable housing space, and HDFC has been working closely with the government on shaping policies around the affordable housing. I do feel this initiative of Government of India under its flagship scheme, Housing for All, is worth replicating in similar economies where housing still remains a basic necessity. As I mentioned in my previous slides, the tax incentives and subsidy have been incorporated here to reflect how it impacts the effective rate of interest for a borrower. As you can see in the slide, the tax incentives have only been increased over the last 20 years. So deduction on interest payment has increased from 75,000 in the year 2000 to 2 lakh in 2020. And similarly, deduction on principal increased from a meager 20,000 to 1.5 lakhs. Further, with introduction of subsidy under the credit-linked subsidy scheme, the effective rate has come down to as low as 2.4% in 2020 from what it used to be 12% in the year 2000. Of course, these schemes are to facilitate housing more for people at the bottom of the pyramid. I will not spend much time, as I have covered largely on this scheme. Now, this brings me to the interesting part of my presentation. HDFC as a knowledge partner. HDFC has been described by the World Bank as a model private sector housing finance agency and has provided consultancy services and technical assistance in various countries in Asia, Africa, and Eastern Europe to new and existing institutions. HDFC looks to share its expertise in mortgage finance in countries with emerging and nascent housing finance markets. HDFC has, for many years, recognized the huge potential that the African continent has in terms of developing the housing finance market. HDFC was a part of the International Finance Corporation's Africa Housing Working Group meetings in Washington since 2007. In 2012, the African Real Estate and Housing Finance Academy awarded HDFC as a best foreign enterprise with a developmental role in housing finance in Africa. Now, I would like to share HDFC's footprint in Africa. As you can see on the training programs, HDFC offers training programs in the field of mortgage finance. HDFC has its own training center, which is called the Center for Housing Finance, which is close to Mumbai in India. HDFC conducts housing finance management, which is a week-long program every year for international participants. HDFC also conducts training programs at the client's location. Over the past 10 years, Frankfurt School of Finance and Management, along with HDFC, have been conducting the Housing Finance Summer Academy in Frankfurt every year. Several participants from different countries in Africa participate in the program each year. HDFC has always maintained that training is extremely important in a customer-oriented business like housing finance. HDFC believes that there are huge mortgage training needs in Africa. HDFC has always had strong representation from Africa for its housing finance training program. Some of the participants from African housing finance providers that have been trained by HDFC so far are listed in the slide here. In fact, it covers all corners of Africa. On the consultancy services, HDFC has been invited to provide consultancy services in the fields of housing finance and urban development in various countries. As part of the consultancy services, senior and experienced personnel from HDFC visit the country, study various aspects of the housing finance market, provide a detailed report of the study undertaken, and offer services in an advisory capacity. HDFC also renders technical assistance to existing and greenfield mortgage finance companies. Under the Technical Assistance Program, HDFC deputes experts in the identified operating areas who review and advise client on products, services, design marketing strategies, systems and procedures, assist in developing new products, and provide detailed operating guidelines. These experts visit the client and work closely with its officials to understand the external environment in which the client functions, and thereafter make recommendations on products, policies, systems, procedures, and strategies. Besides spending time at the client's location, the experts advise on credit, legal, and technical documentation, and even customization of IT systems. The ultimate objective is to support the client in all aspects relating to mortgage finance operations. HDFC has also made equity investments in various international housing finance companies such as Delta Brack Housing Finance Corporation in Bangladesh, NDB Housing Bank in Sri Lanka, Egyptian Housing Finance Company in Cairo, HDFC Maldives, and First Housing Finance Tanzania Limited as well. In addition to the above mentioned equity investments, HDFC has also rendered technical assistance in other countries. HDFC strongly believes that the new growth and emerging opportunities in mortgage finance are in the African continent. And HDFC is keen to share its expertise and help develop mortgage finance markets in Africa, and is ready to support viable initiatives that will increase its footprint across the continent. In fact, we are looking forward to associating with the African Union of Housing Finance in a much bigger way to kickstart these initiatives on training and consultancy front. This brings me to the last slide of my presentation. And as has been mentioned by Reverend Professor Prem Saran Sassangi Sahab, that in the service of the last, the least, the lowest, and the lost among mankind, we at HDFC are doing our bit in the housing sector. Thank you.
Shalabh, thank you very much. That was very, very interesting, and it was so good to hear a little bit about the Indian experience, and also about the work that HDFC is doing and its work on the continent. We have one comment here from Malcolm Chabala at the Zambia National Building Society, and he was asking would HDFC be interested in collaborating with ZNBS. He's inviting you to contact him. He's left his email address in the chat.
Sure. We really look forward to associating in a much bigger way. So in case you can share the coordinates, I will take it forward with him.
Okay. Yeah, no, that's great. That's excellent. Then there was a question, I think this came through. It's hard to tell from the time, but there was a question from Rodrigue Bazame, who said, by which indicator do you measure affordability and how do you calculate it?
Well, I mentioned in the slide somewhere that there are housing units defined as per the area, and then there are income levels also defined in 3 tiers, basis which we define affordable housing in India. These definitions are standardized by the National Housing Bank, which is a regulator for housing finance companies.
Okay. And Shalabh, how do borrowers manage variable interest rate risks? That comes from Sita Shah, who's in Kenya.
Come again, I missed the question, sorry.
How do borrowers manage variable interest rate risks?
Okay. Well, this has caught up as a phenomena in India where the rates both on the deposits as well as on the lending are fluctuating. So, much like the lending rates, people have got, accustomed to the deposit rates as well. And gradually we are trying to link our rates to a benchmark rate of the central bank, which is Reserve Bank of India, which is repo rate. So repo rate, becomes a transparent, benchmark, which every institution is following to give a rate, to the individual. And an individual is more satisfied with the standard rate defined by the government, which is linked, to his loan. So this is the way, where everyone is somehow comfortable and has accepted the fact that whatever is coming from the government is fair, and hence, I feel it's catching everyone's attention. It's actually, getting accepted by people in India. Moreover, I must also add here that variable rates helps in reducing the rate, on a regular basis. So we have seen over the last 10 years, there was only one spike where the rates went up. Otherwise, the rates only have come down. And as we speak, in the last 10 years, we have seen a high of 11.5% rate of interest on home loans and, 6.9 that we are offering at the moment. So you can see how, the rates are only benefiting by being on the variable rate side. I can't hear you, Kesia.
I was muted.
Sorry.
It's something that we struggle with in South Africa. Is the security of the fixed rate mortgage, but that is priced higher than a variable rate mortgage. But the variable rate mortgage is more difficult to plan around, and I don't know if lenders are necessarily agreed on that in this particular segment of the market.
Yeah, you're right. The fixed rates in India also are on a higher side. Especially, see, one boards fixed rate in India only when they expect the rates to go up. Unfortunately, as we have seen in the recent past, and in fact for the last 5 years, we haven't seen any spike in the rate of interest. So the rates have only been coming down, and government is only trying to make it more affordable for the common man. Hence, the I should say the inclination towards a variable rate is much higher than what we see on the fixed rate front.
Yeah, no, absolutely. We're a little worried now because the interest rates are lower in South Africa than they've been in 30 years. And that's part of the post-COVID recovery plan and economic stimulus. But in order to, that then sort of makes us wonder where, in which direction will the rate go now? Sita has a follow-on question. What is the current interest rate offered on government treasury bonds for a 15 years? So a 15-year tenor.
Well, this is fluctuating every day, Sita, and I guess it is around 3.5% or so. But I may be incorrect as we speak. This is fluctuating on a daily basis.
Okay. And you really, the two of you should have a conversation, because she has another follow-on question, which is relative to interest rates that borrowers pay on their mortgages. So how does that relate?
No, I missed that point again. Sorry.
The interest rate on the treasury bonds relative to interest rates that borrowers pay on their mortgages.
Well, treasury bonds have a direct impact on the cost of funds for any institution. But India being a highly regulated market, the rate of interest is more or less, defined by the government through the repo rate and not through only the treasury bonds. So the reflection on the rate of interest is more by the repo rate defined by the Central Bank of India. And the cost of fund, overall averages out to more or less the same rate being followed by, all the institutions. So we are almost all housing finance companies, barring the smaller ones or the new ones, are able to operate at the same rate band. Hence, for a common man, whether he comes to HDFC or let's say he goes to SBI or another banks, the rate of interest will be within the same range, broadly within the same range.
Okay, that's great.